So you're running a business and you're working with a CPA, and at the end of the year, you give your CPA financial statements, okay? And you think that's bank statements. Bank statements are not financial statements. Your CPA absolutely hates when you give them bank statements. Oh, but you're better than that and you give them spreadsheets. Your CPA works with hundreds, if not thousands of clients in their firm. They do not know what your spreadsheets mean. They do not know how they're formatted. They do not know anything around that, and neither does their staff. So now when you give them spreadsheets, they have to go in and figure out what these things even mean. So there are standard financial statements that are used to actually make decisions and run your business, and then at the end of the year are given to your CPA for them to file taxes and give you tax advice. You see, with bank statements, you can't give tax advice. Bank statements aren't categorized. It just shows income and the transaction of, like, this is an expense, this is leaving the bank account, and this is coming into the bank account. And it's all the line item, as if you gave them thousands of receipts. It means nothing to them. Spreadsheets are similar. And the problem with spreadsheets is there's no reconciliation, which means you're not ensuring that there's not transactions missing. You're not ensuring all the transactions are there. You're not ensuring there's no duplicate transactions. These are the problems when you ask your CPA, hey, I need tax advice. Hey, I need you to file my taxes, and you give them a bank account or a spreadsheet. So what do we do instead? The proper way to run your business is with a P&L and a balance sheet. Now, if you want to get very sophisticated, you can use a cash flow statement. The reality is most business owners don't know how to read any of these though. So what we do is we actually work with you as the business owner. We will actually create it for you, the P&L, the balance sheet, and the cash flow statement. And then we meet with you every single month to go over what each one of these means. And then at the end of the year, you can give your P&L, your balance sheet, and your cash flow statement to your CPA to give you tax advice. You guys can implement high-level tax strategy to reduce your taxes, and they can file your tax returns for you. So these are the three statements that your CPA refers to when they refer to your financial statements. Is your P&L, which is your profit and loss. That shows how much money came into your business or organization, how much left, how much was expenses, how much was salary, all categorized by marketing and payroll, rent, A, B, C, D, E, F, G, right? It lays it all out in a formatted order. Your balance sheet shows the balance of your assets and your liabilities. For example, if you own a building, it's gonna show that your building is worth, let's just say $1 million, and then you have a liability or a loan on it for $800,000 that you owe to the bank. It's gonna show your bank account balances. All of the assets and liabilities in your company is on the balance sheet. Your cash flow statement shows the actual movement of money in and out and the cash flow of the business on a monthly basis. So follow for more, hit the subscribe button so you can see every time that I drop a video, and I'll see you on the next one.